What's up, guys? Welcome back to another video, and in this video we're going to be talking about strong versus weak market structure. As you can see on the right corner over here, you can see my three keys that I have, and you can see market structure, or structure. I didn't put the market, but structure, which stands for market structure, right, is the number one, right? It's the number one spot, meaning without structure, supply and demand, cause and effect, the other two do not matter. All right, so structure is the most important one. So you have to understand structure to be able to find your way throughout the markets, because if you don't understand structure, you could be, trading in an area where you're not supposed to be trading, or that is not actual supply or demand. So you have to understand what structure is doing and where you are in the structure. All right, so to give you a little bit of example, right, the blue line is our main market structure. So the blue line is going to represent our strong market structure. That is your higher time frame structure. That is the structure you're going to be going off of. That is the structure that's going to tell you what your trend is, right? So in this case, we are bullish, right? So in the red line, this is our weak market structure. Simply, this is our internal structure. This is our order flow, right? That's known as our weak structure. Okay, so as you can see, as the market is going towards up, you see the two structures are matching each other. Okay, they're matching each other, and on the weaker side, we're making higher highs, right? But as soon as we make a high on the strong market structure, you can see how the weak structure is now breaking. Okay, it's breaking the structure, and now on the weak side, we are bearish, right? But we're still bullish on our main strong structure. So this is where the case comes up, where when people see this break of structure right here on the weak side, they'll think the market itself is bearish, when that is not true. All right, sometimes you can forget what the strong structure is showing you, which is the higher time frame, which is our primary structure, right? And you can get caught up in this lower time frame or this internal structure that can, just lead you astray, and you could take some losses that you're not supposed to be taking. All right, so the case comes up where once the strong structure reaches an area where, supply or demand, okay, that it wants to buy from. In this case, we're looking at a demand area. Let's say there was a order block somewhere over here that we reached, right, a point of interest. And now we have the strong structure, right, the blue line, that wants to buy again. All right, many people will get caught up taking this sell right here on the weak side, right? On the weak structure, many people will get caught up trying to take another sell and continue to sell the market. And then once the market goes back up, they're going to be stuck. All right, so that is the basis of this video, and that is the diagram that I wanted to show you. All right, you have to understand what is your higher time frame telling you, what is your primary structure telling you. Okay, if you understand what your primary structure telling you, then of course you can trade this lower time frame or this internal structure to the downside. But understand that once we reach higher areas of demand, you know that the market is going to go buy again, and now that can set you up to catch buys on the market again. So it's essentially understanding where you are in the market and how to trade that position that you're at. So now we're on AUD CAD, and I'm going to show you another example of this and how to not get caught up in weak structure. All right, so looking at this market right here, all right, this is our main structure towards the downside. Let's say this is our strong structure. Okay, we are bearish. The strong structure is bearish. Now let's zoom in into the market and see what we see. Well, as the market is going down, let me delete this arrow so it doesn't get in the way. So as the market is going down, you can see high, low, high, low, high, low, high, low, high, low, and then boom, we break this high, right? So higher time frame is bearish, right? But you can see in the internal, we are bearish as well. As soon as we break this high right here, the market has switched. Okay, so now our internal structure, our weak structure, is now bullish. What do we do now? Right? Well, first of all, where is our areas of supply? Right? Well, our area of supply, our first area is right here. Okay, this is our first area. The market gave us a reaction we ended up continuing higher. Does that mean the market is just going to continue going higher? No. Why? Because this is what we need to break, because this is our strong high. This is the high that created this low. So that means this is part of our strong structure, and that's what we need to break to be considered bullish. All right. As you can see, once we reach this area, the market didn't care about any of this anymore. You can see we just completely sold. I hope you guys are getting the point. You have to know the difference between weak and strong structure, right? You have to know the difference. This internal structure is the weak structure. This higher time frame, right? That is our strong structure. You can see we had a good trend going on the weak structure, but as soon as we reversed, right, and the weak structure was still going towards the upside, as soon as we reached this higher area, the market completely went down, no matter what the weak structure was giving us, because the strong structure is there for a reason. Okay, the strong structure is still maintaining. Our bearish idea is still maintaining. Okay, so that's the point that I wanted to get across. All right, and as you can see, what happened once we reach this higher area, we just turn right back on the weak structure, going bearish again. Okay, what do you think is going to happen? It's going to break. It's going to target this high, right? And then we're going to sell again. Well, I have it in replay mode, but you can kind of see the dots going. All right, you can see the dots going down. So that was the point that I was trying to get across. So in our mentorship, right, we know this as our leg towards the downside, and we know the internal structure as order flow. So we know this as our leg, and the internal structure is known as order flow. All right, this is what we call order flow. This internal structure is called order flow. Okay, now when I put structure here on my 3 keys, I am talking about our legs. I'm talking about our strong structure. Now we're looking at Euro USD right here, right? And you can see our overall higher time frame is bearish. You can see we have this huge bearish leg to the downside. And fortunately, right, on the internal side, right, on the weak structure, you can see that we are still continuously going down. Okay, so there's no really messing up here on EU. You just know the market is going bearish. All right, we're just continuously going bearish. All right, cool. So where the problem comes in is, let's say, let's zoom in a little bit. Let's say we were to break this high right here, which is our most recent area of supply, right? If we break this high right here, you have to understand that this is our next area to sell. You're not going to look for buys. You're going to sell from here. All right. Now, if we break this high, right? Let's see. We break this high. Where are you going to sell from? Here. Okay, so the understanding of this is that just because we break this internal structure, meaning this high right here, doesn't mean the market is now ready to just completely, you know, go bullish. Okay, that's not the case, right? We still have areas of supply that we are targeting to trade from. Okay, so it's gonna be in your best interest to look for sales as this market is retracing. So understand that just because we break internal structure doesn't mean the market is, you know, completely turning over. Doesn't mean we're completely reversing. Okay, you have to understand the difference between internal structure and the main structure. All right, so all of this going down is this internal structure of this one huge move. All right, and you can see we actually invalidated this low here, but you can see that this is one huge leg towards the downside, and inside you have this internal structure that's going down. All right, now we haven't invalidated that internal structure yet, but that will probably come up. So, you know, use this video as reference for once the market does create that bullish impulse and it starts taking out these areas that you're probably looking to sell from, that you're just not automatically thinking that we're going to completely buy. Now, understand that the market does have retracements and we do have pullbacks, but as we are pulling back, understand these areas are still valid areas. All right, and we can continue going up all the way up to here. Okay, all of these areas are areas the market could just reverse from and sell because we are bearish. Just because we're showing this weak market structure towards the upside doesn't mean that the strong structure is not going to hold. All right. So in this case, we are completely bullish. We are completely bullish. The market is going towards the upside. I don't have time to wait for the market to come all the way down here to target our strong structure. Okay, because understand that this right here is the low of our strong structure, and then all of this inside is our order flow, right? That's part of our weak structure. Now, like I said, I don't have the time to wait. No one has the time to wait for the market to come all the way back down here to catch a trade. So what are you going to do? As the market is continuously going towards the upside, right, you can trade inside of this. Understanding that our strong structure is bullish, you can trade that. All right, so the key here, right, the key here is there's nothing wrong with this order flow, right? The only thing that comes up where it becomes a problem is when you try to trade against the strong structure. But let's say if our order flow was bearish, as you see right here, we're not trading that. Okay, as you can see, look, if you would have tried to take a sell from here, you would have lost. Why? Because we are bullish. Our structure, our strong structure, our higher time frame is bullish. All right, do not trade against the strong structure. All right, do not trade against the higher time frame. All right, so that was the key of this video. If you want more in-depth information on this, join the mentorship. We talk about it. That is our first thing that we cover because it is the most important thing to understand. All right, now we know it can be, you know, confusing, especially on YouTube, right? Because there's only so much you can say, but that was kind of like the foundation of it. All right, that was the foundation that I can give you guys to understand the difference between higher time frame, internal structure, or if you want to say strong versus weak, right? So this was the comparison between strong versus weak structure. All right, the key thing is to remember to never go against the strong structure. All right, only trade the weak structure when it's going alongside with the strong structure. Okay, I hope I broke that down clearly for you guys. If you guys want a part 2 to this, or you want some more information on this, go ahead and let me know down in the comments. Go follow me on Instagram. That's why I send some tips, right? I send tips there. I send my trades there. We have Q&As. We have all sorts of stuff on Instagram as well. So, I mean, the links in the description of whatever you need, whatever services you need, and what the services that we provide. And I will see you guys in the next video. Peace.